Good afternoon, everybody. It's Andrew Smith from Royal LePage, Kelowna. Welcome to Coffee with Andy. It's Tuesday, October 22nd. Market update for the week ending October 20th. DeVille Coffee. We're at DeVille. This is at the corner of Bernard and Pandozzi. You know the area. It's kitty corner to Lululemon, which is kind of a landmark building. And I was going to say Mosaic Books, Mosaic Books across the street. Nice little corner, kind of the epicenter of downtown here. Used to be a Starbucks. Used to have a Booster Juice next door. Now it's Momo Sushi and DeVille Coffee. DeVille Coffee is booming, by the way. Although we're here in the afternoon right now, it doesn't really show it. But they're going to have another one down across from Gyro Beach. May even be open now. Anyway, nice spot, nice music. Real estate. 37 residential sales last week to go along with 20 apartment sales and 8 townhouses changing hands. The average sale price for residential was just over $1 million, and the median sale price was $900,000. So kind of a soft week. It's probably what we're going to be able to expect from now until blizzard season, wherein they shut our highways, slow the highways down, and prices tend to soften this time of year just because it's the absence of the out of town buyer. It's people from Glenmore buying from people from Dilworth who are buying from people in Glen Rosa. It's kind of us in the valley buying from each other as opposed to people coming in and buying $3 million lakefront houses. Just normal people buying from normal people. So you tend to not see the numbers going into the stratosphere. But 37 is okay. It's not like we were almost at 50 last week, but from a historical point of view, if you get back before 2020, 37 would have been good for a week in mid-October. For reference, last year we were at 30. So, improvement is gradual, and we've got good news coming. Tomorrow we're going to get a Bank of Canada announcement, and the news is either going to be good, really good, or really, really good. So, at worst, it's going to be a quarter point drop in interest rates. So that's, if nothing else, psychologically, it's going to get people off the couch, at least get online and figure out what their calculations are. If their payments go down from $2,875 a month to $2,720 a month, that's a good thing. And that makes our phone ring. It makes open house traffic, a lot more active. So kind of looking forward to that. And condominiums. Let's just end with condominiums here. There's 237 vacant condos on the market. That's a ton. That's little boxes in the sky. That doesn't even count not even counting the new stuff, which I don't have numbers for, but it's probably at least that. But these are housing units that don't have tenants in them. They don't have short or long-term tenants. They don't have owners. Nothing. They're just for sale, not generating any revenue, paying strata fees and insurance. People just don't want to rent long-term to long-term tenants. So it's unfortunate that didn't really work out as planned for with what the government tried to do with that, creating housing units. It just hasn't done it. But something's got to break pretty soon. Like some of these people are eventually going to have to either lower their price or put tenants in them, which will, in theory, decrease rents. Maybe. Anyway, it's just alarming, that number of 237. That's about it. Thanks for watching. Andy Smith, Royal LePage. Talk to you next Tuesday.